Welcome to Looking at the Markets with David Modell. Here's an indicator that gives you not only an entry point, but also stop losses and profit targets. Not too many indicators do that. These are called pivot points, and I'm going to try to explain it as best as I can. First, I'll show how you can use it as a swing trader and then as a day trader later in this video. Okay, so this is stockcharts.com. It's a daily candlestick chart for Apple stock. And so here we see a number of levels here. There's P, that's the pivot point. All right, and then you've got R1 and R2. Those are your profit targets. And then you've got S1 and S2. Those are your stop losses. If you're a buyer, if you're going to take a long position. If you're shorting, then it's the opposite. But we'll talk about that. Okay, so when would you, according to the pivot point system, when would you buy? Well, let's pretend, and this is not actually true with these candles. So pretend these candles aren't here, okay? Let's just pretend that the candlesticks are below P, the pivot point, and then they clearly break above it. All right, a clear break, not just kind of dancing on the line, but clearly, breaks and closes. Candlestick closes above P, all right? Then you can take a long position. You can buy the stock according to the pivot point system, all right? And what's your stop loss? It is S1. That's when you get out, all right? And you take a small loss. What is your profit target? R1. That's your first profit target, all right? So it gives you the entry point and your stop loss and your profit target. All right. And you could just keep it simple. You could just buy it if it breaks above the pivot point, above P, if it closes above it, and then just sell it at R1. Okay. Or sell it at S1 if it goes down. Now, let's say you're willing to take a little bit more risk. You like to let your winners run. Cool. Okay. And maybe you're into trailing stops. All right. That's cool. You can use it that way. So let's say, all right, so it closes above the pivot point, you buy it, and then it goes up to R1. But let's say it's going up really fast. Like it breaks not just barely above R1, okay? It really shoots just like a rocket, okay? It closes way above it. And let's say also you're looking at the volume and you see a big green volume bar, all right? So there's lots of conviction, lots of volume behind that move. Well, what you can do, according to the pivot point system, is just let your winner run. Why take profits there? If it's shooting like a rocket, you can let it go up more, all the way up to R2. And so now, if there's lots of conviction, lots of volume, and it's just fast movement above R1, then you can decide, okay, you know what, I'm going to let my winner run, and now your profit target can be not R1, but R2. R2 can be your new profit target, and your new stop loss is now, it's not S1 anymore, now your stop loss is P. All right, so everything moves up. It's kind of like a trailing stop. It's pretty cool. All right, and that's up to you. So, just to recap, you can buy it if it breaks clearly above the pivot point P, if it closes above it, and then your first profit target is R1, your first stop loss is S1. And if it just kind of goes up to it barely, not with much conviction, you could just take a profit here. But if it's shooting like a rocket above it, then you can make your new profit target R2 and your new stop loss is P. Okay, now what if you like to short a stock? Well, let's say, and again, it didn't happen here, but let's pretend that you've got the candlestick above P, above the pivot point, and then it goes clearly, decisively below P, the pivot point. That did not happen here. It just kind of danced on it, right on the pivot point, didn't clearly break below it. So you would not take a short position here. But let's say, let's pretend that it broke and closed clearly below the pivot point P. Okay, so your first profit target would be S1. Your first stop loss would be R1. And if it just kind of touches here, not with much conviction at S1, you can take profits. If it's like a falling knife and it shoots way below it, and if there's a big red volume bar to show you that there's conviction behind the move, then you can let your winner run, and you could make your new profit target S2, and your new stop loss would be P instead of R1. Now it's P. All right, so it's just the opposite of if you took a long position. You just reverse everything. All right, so that's what it would look like as a swing trader, let's say if you're a day trader, that's cool. You can go to tradingview.com. And what's cool about this, I should have put the volume bars on here, okay, but and this is the Apple chart, but it's the 15-minute chart. Day traders might use the 15-minute or 5-minute, 1 minute, whatever you like. All right, I just put this up as an example, and as you can see, oh, by the way, I forgot to mention what's interesting about this is that they recalibrate the pivot points every so often. All right, because the price is changing, and so the pivot points keep changing. So you have to be aware that it's going to change every once in a while. And here it is. They change it from time to time. They shift and move it over to adjust with the new price of the stock. So this is a 15-minute chart, and what's cool about this on TradingView is that they have not only the pivot point and R1, S1, R2, S2, like you saw on stockcharts.com. This goes even further. This is R3, R4, R5, and below it S2, 3, 4, and S5. So you can really let your winners run here. You really get something like a trailing stop, if you will. All right, so if it breaks clearly above P and closes above it, you can make your first profit target. If you're going long, if you're buying, your first profit target would be R1 with your stop loss at S1, okay, and then but if it just keeps going up really fast with conviction and volume, then you can let your winners run. Your next profit target can be R2, and then you would change your stop loss to P, and then your next, if it just keeps going, let it run if you want to. Your next profit target can be R3, and you would change your stop loss to R1, and so on and so forth, all the way up to R5. All right, so I think that's pretty neat, and check it out. Yeah, I recommend that you virtual or paper trade it first, just to make sure this is right for you. Always limit your risk and make your own decisions. But if you want a really simple system with everything in place, your entry point, your profit target, your stop loss, it's like a trailing stop almost. And it keeps adjusting with the price. It comes out with new, every so often it's got new levels, new pivot points, and so on. I think it's pretty neat. It's something you can look at, and it's almost an all-in-one indicator. You might not even need anything else if you don't want to. All right, so I hope you found this helpful. Please subscribe to my channel if you haven't done that already, and hit that bell on YouTube so you can keep receiving notifications about when I put out new videos. And please give this video a thumbs up and leave comments. Do you like pivot points? Do you use it? Let me know. It's pretty cool, right? Also, I help people. I coach people on how to use these things on trading and investing and technical indicators, fundamentals, things like that. So if you want some help, you can email me anytime. My name is David Modell. My email address is davidmodell@gmail.com. Thank you so much for watching and listening. I'll talk to you again soon.